For more insight on early morning trading, I'm joined by Rebecca Walser, president of Walser Wealth Management. Rebecca, always a great pleasure to speak with you. The S&P 500 rebounding following a nearly 1% decline this week. The index is about 4% away from all-time highs. So do you see today kicking off an upward trend, or do the markets still have some challenges ahead here?
We definitely have some challenges. Obviously, JP Morgan's numbers were great this morning, and we see that the earnings season could still be really good, especially for the banks. They're still, releasing some of their loan reserves, not as much as first quarter, second quarter, but we do expect that to help as well. And we start to see some consumer activity pick up, especially, going towards the holiday season. But obviously, the CPI numbers out this morning do let us know that inflation is still an issue, and it's not as transitory as the Fed has been leading us to believe. And so the minutes today, I'm going to be very closely looking at those to see what was really going on behind the scenes in September and where we can really go from here.
So the CPI data, in combination with the Friday report that we got on the the employment situation, I should say, which came in below expectations. These two things combined, how might this change the Fed's tenor and how they discuss and address some of these issues going forward, and perhaps accelerate some of their timelines?
Yeah, I think that there's a really fine balance they have to toe, right? Because they already said they're going to start tapering potentially next month in November. And so that is obviously to fight inflation. And we certainly see that inflation is a lot more sustained than they were alluding to by continually saying that it was transitory. But we see the jobs report, and missing the jobs report as big of a miss as we got. And really, let's be honest, there was really no good information in that jobs report. We had women that lost 26,000 jobs. We had 144 state and local school board employees, public local school board school employees related to schools that actually lost jobs in September, which is really unheard of because, that is the month everyone goes back to school. That's the time that they're hiring teachers, administrators. So, we also saw 38,000 permanent job losses in residential assisted and long-term living care facilities for older, people. So there was a lot of bad news in that job report and nothing to speak of that was good. And then on top of that, seeing the sustained CPI inflationary numbers that we're looking at right now, we have a lot of challenges. So I think the earnings seasons on the financial sector is going to be helpful, and that will let the market know, okay, there's some hope. But, supply chain issues, inflation, all of these things, 10 to 11 million jobs opening, that nobody's going back, losing 200,000 people outside of the labor force last month, decrease in the labor participation rate. These are all just really strong headwinds that we have to deal with right now.
Well, you mentioned earnings season and particularly financials here, and that triggered, one of the funds that many people may watch out there, XLF, tracking the S&P 500 financial sector. With that in mind, up 32% year to date. What are you going to be looking out for from the financials and the banks that are going to be reporting earnings this earnings season to say that this trajectory can remain intact?
What we're really looking for is what is the, net interest margin? Are we seeing that even with the inflationary pressure that the banks are starting to recover and making more on actual earnings of loans versus what they're paying out in deposit returns? And, the problem is that are people taking these loans out? Are we going to have consumer spending with the holidays? Is the supply chain going to make people say, well, there's not a lot I can go buy, so I don't need to raise, consumer loans. I don't need to use my credit card. I don't need to take out a loan. I don't maybe need to go get a mortgage. Maybe the housing market is too high. All of these things, Jamie Dimon noted in April that year over year loans are substantially lower. And if you extract PPP from last year, we're about 5% less than where originations were without PPP in a normal year. So we're really looking to see loan levels recover, both on the commercial side and the consumer side. We're looking for net interest margins coming up, and we're looking for in CPI to not really impact, or inflation and supply chain issues to not really impact what the spending season is for this quarter. All of those things are headwinds that are definitely going to impact where we are in this fourth quarter coming up.
When you mention consumers as well, one area that consumers are seeing continued headwinds is in the travel industry. We've been talking about and monitoring some of the cancellations, and Southwest most notably comes to mind. But for many consumers that are taking to the skies later on this year, there's not just going to be potentially a higher ticket price that they have to pay, but the risk that they run of a cancellation as well, given some of how the employment situation has indeed permeated into the ability to actually deliver on some of the routes and flight schedules for airlines too. Most notably, as companies like Delta Airlines even have reported earnings this morning, a mixed bag there. What are you going to be keeping in mind and keeping tabs on in terms of some of their key performance indicators?
It's a great question. We've got a lot of issues going on with the airlines, and specifically we've got labor unions that are rejecting or fighting back on the mandatory vaccine that has not yet been promulgated by Biden. It was a press conference that he had in September. We don't actually have any real documents. I understand the Labor Department, the DOL, is now promulgating a rule that will actually be published and potentially put out by this administration very soon. But, I was a little disappointed with Southwest this weekend because Americans aren't dumb, right? They're pretty smart. And so when Southwest cancels almost 2,000 flights over a weekend, and none of the other carriers are doing that to that extent, to blame weather and air traffic control is just simply obviously not true. So be transparent, be honest, let the American people know what's going on, because you don't want to make your people, your travelers that are loyal to your brand, to your airline, and a lot of people are loyal to Southwest, especially with their loyalty program. They don't want to say, well, I don't trust them anymore. I'm going to go to American. I'm going to go to United. I'm going to go to Delta. So you don't want to have your CEO out there not being honest. It is very clear that what is happening with these vaccine mandates are impacting the airlines. We have American now. We're starting to see or hear that they might go on strike. The pilots might go on strike. So we're having a lot of impact in the airlines, and people just need to understand what's going on so they can plan their travel accordingly. They don't need to book flights that are not going to be available or not going to be held, because that's when you're going to lose trust. And this is not the time to lose trust with your consumer base.
Just lastly, while we have you here, Rebecca, I got to be quick. Apple, of course, also in focus as their production is, and the issues, the bottlenecks there are coming even more so to light, could potentially impact what they see in the fourth quarter on the iPhone side of the business. What particularly are you tracking in terms of the impact to the broader tech sector here, as we know that this global chip shortage is not just an Apple issue?
Yeah, they obviously reduced their iPhone production numbers down substantially, drastically, and it's obviously supply chain issues. And, it's a shame, because we had a really big opportunity during the Trump-China trade imbalance, tariff battle that we all painstakingly went through for, it seemed like, forever. People, a lot of companies had a lot of chances to move a lot of supply chains outside of China and other areas to have more diversity of supply chain. And a lot of companies that didn't do that are now maybe potentially going to understand the consequences of this decision. So we are looking very closely at the supply chain management on the Apple side, and we're really understanding that chips are not just unique to Apple, but certainly very important in smartphone technology and all of the electronics that Apple obviously produces. So this is going to be a big concern. Apple has a long-term runway. They have a long-term global growth strategy, I think, is very solid. But obviously, this is going to affect the short term, certainly the Christmas season, certainly this year's earnings. And I would just encourage all supply chain managers across the world to really look at your supply chains and take assessment.
Rebecca Walser, president of Walser Wealth Management, joining us here this morning. Rebecca, thanks so much for the time and insights and perspective.